You ready? Because what I'm about to say can, quietly, change everything you think you know about wealth, power, and the next financial shock. What if I told you right now, as you watch, a handful of billionaires around the world are quietly building a fortress, not with real estate, not with Bitcoin, but with chunks of rare metals. Metals so obscure that most people don't even know their names. Metals that, by 2026, could become the ultimate insurance policy against a collapse few will see coming. They're doing it in whispers. But soon, the results will speak loudly. It begins in the shadows of global demand, where industry, technology, and geopolitics collide. In 2025, longtime gold and silver investors watched in shock as the spotlight shifted. Metals like platinum, cobalt, and rare earth elements began outperforming the traditional safe havens. Platinum soared by nearly 77% this year alone, crossing the $1,500 per ounce mark. Cobalt? Its price surged over 40%, trading above $35,000 per ton, levels not seen since 2023. What changed? Simple. The world changed. Our economy is shifting. The race to electrify transportation. The scramble for renewable energy. The boom in data centers, AI infrastructure, green hydrogen, and clean energy grids. All of these consume metals, not just gold and silver, but strategic metals rarely seen in everyday portfolios. Suddenly, rare earths like neodymium, dysprosium, terbium, industrial staples like cobalt, platinum, copper, nickel, everything from wind turbines to electric vehicles needs them. Supply can't keep up with demand. Processing bottlenecks, export curbs, geopolitical choke points, especially supply dominance by certain countries, all combine to make these metals scarce, strategic, and dangerous in the right hands. And that's where the billionaires come in. Take Jason, a billionaire based in the US back in early 2024. He still believed in traditional hedges, gold, real estate, maybe a dash of tech stocks. But as news spread about rare earth export curbs, renewable energy rollouts, supply constraints, he began quietly shifting, not by buying gold bars, but by quietly acquiring small industrial quantities of metals, platinum, neodymium, cobalt, through private metal dealers, enough to matter, but not enough to raise alarms. Why? Because Jason understood something many don't. When fiat currencies collapse, pension funds dry up, and stock markets crash, industry doesn't stop. EVs still need magnets, solar farms still need wiring, green grids still need copper. The demand doesn't vanish, the raw materials suddenly become priceless. Imagine a world where the dollar is weak, inflation is raging, banks are failing, yet global efforts to fight climate change continue. The world still needs materials, and he owns them. Let's rewind the clock. History gives us grim warnings. Think of the 1920s Germany, money printing, hyperinflation, savings wiped out, banknotes becoming worthless, people forced to carry sacks of currency just to buy bread. Now, replace bread with electricity, mobility, renewable energy. The stakes are even higher. This time, central banks around the world aren't printing to rebuild broken empires. They're printing to save economies threatened by climate collapse, debt spirals, geopolitical rivalries. The risk of currency debasement, of inflation, of financial collapse is real, but the world cannot stop. Factories, power grids, transportation, they must keep running. And they all need metals. Metals that can't be conjured like fiat. Metals that require mines, logistics, refining, where supply chains can break, bottlenecks emerge, and control becomes power. Those who own those metals, the quiet buyers, they hold a kind of power, a silent insurance. Now, picture this, it's late 2026. The global economy is creaking. Inflation has surged worldwide. Several emerging market currencies have collapsed. Stock markets have crashed by 60 to 70% in many regions. Governments scramble to prop up failing banks. Unemployment surges. In this chaos, companies that produce electric vehicles, renewable energy infrastructure, semiconductors, they aren't just worried about sales, they are desperate for raw materials. Supply chain disruptions caused by export bans, environmental regulations, mining restrictions, and political fights have reduced the flow of critical metals. Demand remains high. Suddenly, cobalt isn't just a commodity, it's a weapon of leverage. Platinum isn't just jewelry supply, it's a lifeline for hydrogen fuel cells. Neodymium isn't just a rare earth, it's the heart of every EV motor and data center magnet. The price of these metals spikes, and not by 20%, but by orders of magnitude, 5x, 10x, 20x, because now they're not optional, they're essential. and supply is crumbling. Those who bought early, like Jason, see their holdings multiply. They don't just preserve their wealth, they convert it. From paper to real, usable, in-demand assets. Suddenly that obscure 500 kilograms of neodymium he bought in 2024, it can fund multiple luxury properties, undercut any inflation, even dominate business deals. Meanwhile, others scramble. They trade IOUs, cash, worthless paper for metals at any price. Panic buying erupts, governments beg for supply. Corporations are forced to pay ransom-level premiums just to get basic input materials. But why would billionaires go secret? Because visibility is danger. If the market realizes that supply is scarcer than believed, prices skyrocket instantly. A single leak and metal prices could double or triple overnight. That's why these buys happen off-books, through discreet private dealers, via metal-backed funds disguised as industrial procurement, or even via shell companies. This isn't about flaunting wealth, it's about building an unassailable refuge before the storm hits. Remember, gold and silver are visible. ETFs, vaults, bullion dealers. You can track them. Supply, more or less stable. Governments, central banks, analysts, they see who owns what. That visibility can trigger panic, regulation, heavy taxes, or forced selling. But cobalt, neodymium, dysprosium, platinum, they move under the radar. Small batches, industrial labels, classified as raw materials, processors' inventory, harder to trace, easier to hide, perfect for wealth that wants to survive a collapse, but not announce itself. Now, let's talk modern relevance to you, me, every investor watching. The global energy transition isn't a sci-fi dream, it's a reality. The push for electric vehicles and renewable energy is accelerating. Estimates suggest critical minerals demand, copper, rare earths, lithium, cobalt, nickel, will exceed supply by 2035. At the same time, mining and refining are bottlenecked. Environmental regulations tighten. Geopolitical struggles, sanctions, export bans, resource nationalism make supply unreliable. And what do we do as ordinary investors? Stocks? Risky. Real estate? Inflated. Crypto? Volatile. But rare metals? They're as real as a solar panel, as concrete as a power line. Tangible, useful, essential. This isn't about gambling on Bitcoin, it's about placing a strategic bet on the backbone of the next industrial revolution. So when you hear about skyrocketing cobalt prices or neodymium shortages, don't dismiss them as market noise. They could be the early tremors of the next major shift. Perhaps you don't have billions to buy tons of raw metals, but you still have choices. Metal-backed funds, ETFs focusing on strategic and rare metals, green energy supply chain stocks, diversified commodity baskets. Because the truth is, when money fails, the world still runs on metal. Imagine this. An investor from Eastern Europe, let's call him Victor, sees his local currency collapse. He watches as his savings vanish, banks freeze withdrawals, the stock market crashes. His real estate holdings, inflated and frozen, worthless. But he remembers something. A few years ago, he bought a small amount of cobalt and platinum using extra cash, because he believed, maybe quietly, that metals are insurance. When the crisis hits, prices for cobalt and platinum explode. Victor manages to convert his holdings into a steady income stream, enough to relocate, rebuild, maybe even start anew, not full but partial salvation. Now think bigger. Think not just an individual but entire funds, sovereign wealth funds, ultra-wealthy investors, quietly preparing for chaos. This is the hidden wealth transfer, from paper assets to real, useful metals. Rare, supply-constrained, and essential. You might ask, but isn't this just panic? Won't prices collapse once supply catches up? Maybe. But the risk now isn't on the buyers, it's on those who don't buy. Because supply cannot magically expand overnight. Mines take years to open. Refineries require permits, energy, labor, politics. Recycling is improving, yes. But demand is rising faster. The backlog remains. Look at this. In early 2025, cobalt prices rebounded sharply when an export embargo from the DRC, which controls approximately 70% of global cobalt production, tightened supply. Rare earth element supply chains remain fragile, dominated by a handful of countries largely concentrated in China. Any geopolitical move, any export restriction, instantly sends shockwaves through global technology supply chains. In such a world, owning industrial metals isn't a bet, it's a necessity. Mid-video, pause for a question. Are you ready to see money differently, not as numbers on a screen, but as atoms, as materials, as the building blocks of the future? If you are, subscribe now to catch the next wave before it hits. Because while many chase quick gains, the real growth lies hidden in ore, in scarcity, in supply chain fractures. Here's a truth seldom spoken: mainstream media hypes gold. Financial advisors push index funds. Social media glorifies crypto. But none of that matters when supply chains break, when inflation rages, when export bans hit. Metals don't care about tweets. They don't care about regulations. They care about demand and scarcity. In 2025, we saw platinum roar. Cobalt surged. For the first time, rare industrial metals outpaced gold and silver in return. Not by a small margin, but by a wide one. And yet, almost no one talked about it, except the ones in the know. Think about global inequality, global capital flows. The same people who move billions across continents, influence supply chains, and shape markets, they already understand this. They've quietly shifted their fortunes, quietly diversified, which means when the next shock hits, currencies collapse, stock markets freeze, debt explodes, it won't be the masses who hold the cards. It will be those who own the metals, rare metals, industrial metals, strategic metals. And that is the biggest secret many will wake up to too late. So what should you do? Don't follow the herd buying gold bars. Don't bet everything on risky tech stocks. Don't assume real estate or fiat savings will save you. Start looking at metals, not as bullion, but as building blocks. Metals tied to energy, mobility, technology, and survival. Research, learn, consider exposure through funds, ETFs, or direct purchase of refined metals. Understand supply chains, geopolitical risks, and demand curves, because that is where real wealth protection and real opportunity lies. Because when history repeats, and it always does, it rarely repeats exactly the same way. It evolves, and this time it evolves around metal. In the grand narrative of financial collapse and rebirth, the winners will not be those who cling to currencies or paper wealth. The winners will be those who understand value, intrinsic, concrete value, metals, demand, scarcity, utility. While billions sleep on depreciating currencies, a handful will hold the Earth's buried treasure, literal atoms of value, and, as panic spreads, those atoms will speak loudly. If you want to stay ahead, to understand when the next financial shock hits, subscribe now, because I'm going to watch with you. I'm going to show you the hidden patterns, the secret flows, the quiet accumulations. Share this video to warn others, because only the informed survive. And always remember, paper assets may vanish, but metals, real metals, they endure. When the next collapse comes, they won't just matter, they'll define who survives.